This video is sponsored by TipRanks. Welcome back, guys, to episode 2 here of my retirement portfolio series, where I completely disclose every single position I hold in this portfolio, the dollar amounts that I hold in each position, and I kind of want to make this a series where you guys can see how I grow a particular type of portfolio, in this case a dividend growth portfolio, and kind of show you how I go through the ups and downs of the market by staying invested and investing in strong companies. So jumping over to my portfolio here, which I've built out in TipRanks, you can see a few things have changed. The first most notable thing is the dollar amount in the portfolio. It's increased substantially from the last time we've had this update. I believe around 7,000-8,000 the last time. Now we're sitting at around 27,000-28,000. And that's because of a few reasons. I funneled a bit of money in. I also transferred a few accounts over. And this is kind of the consolidated amount right now for this particular portfolio. Now for the rest of September, I do plan to funnel in a little bit more money. So I do have a prediction that we're probably going to end off this year around the $30,000 mark or so, if everything goes well. Now before I get into each position, because there were quite a few changes that I made in the last month, changes in a good way. I added more to my positions, I added a couple new positions, and I think it's actually setting me up for some pretty good success over the long run. So before I did that, I wanted to actually go over my portfolio performance here at the bottom. You can see now my portfolio, I started this kind of in late July. Probably not the most ideal time to start a portfolio because the market was kind of shaky at the time. Nonetheless, I wanted to get my money working for me. Slightly underperformed there, about a negative 0.9% that month. Underperformed the S&P 500. But then if we go to August, which was the first full month that we've had this portfolio kind of figured out and invested, you can see that we actually eked out a gain there, and we outperformed the market by quite a bit there as well. So far in September, we're actually slightly underperforming the market, but again, we're only about a week or so into September, so it's still very early to see how this is going to perform. Again, this is going to be a long-term retirement portfolio. A few months here and there is not going to make or break my positions. And what I really want to show you guys is over time how this performs compared to, say, day trading or buying in and out of positions consistently. My strategy here with this portfolio is kind of to buy and hold forever, to buy and hold dividend growth companies specifically, so I can live off those dividends when I do plan to retire eventually. Anyways, let's get into the fun stuff now. So $27,000, not all of it is deployed, but let me show you what I have done with my portfolio. So jumping over to my holdings tab here, you can see that I have a whole bunch of positions, a lot more than last time. So let me kind of go over a few of them and kind of give my reasoning as to why I'm holding these still. So the first position I have listed here is Altria. If I expand this, you can see I have 109 shares of Altria with around a $47-ish purchase price. So we are down around 5% or so on this position. However, that being said, I believe Altria is an incredible stock to hold for the long term. If I just go into the stock for a second here just to get some more information on it, click on the stats and charts, you can see one of the biggest things that appeal to me about this company and a lot of other people as well is the current dividend yield. Now, this is not the only reason I'm invested in Altria, but this is a good reason as to why I like holding this stock. Not only do I believe that this company is incredibly undervalued right now, I believe the forward PE is somewhere around 10 or so. You can see current PE is around 13. But also that it's trading at fairly low values here compared to its history. If I go to the 5-year, you can see that it's pretty much close to its 5-year low right here at around low 40s. So I think this is actually providing really good value for us. 7.65% dividend yield, can't complain about that. And they recently raised their dividend as well. So solid stock to hold for any dividend growth portfolio in my opinion. That's why I have a good chunk of my position here in Altria. So jumping back here to my holdings now, I can see the next company is AbbVie. I'm not going to go into details for each one of these stocks, but AbbVie is another one I've talked a lot about on this channel. It's another one that I've kind of added to this portfolio because I believe it's going to be a solid hold in this portfolio. And AbbVie is actually one of those companies that I think is, again, going to be performing just fine over the long term. Currently facing a lot of pressure with a possible merger and a lot of debt that is taken on. But I believe those things will iron themselves out over the long term. PE for AbbVie right now seems to be high, but for PE is around a 7 or 8, somewhere around there, which is incredibly undervalued in my opinion. Massive company, $98 billion right here. Strong dividend yield around 6.5%, I believe, and it makes up a good chunk of my portfolio as well. So this is another one that I want to continue adding to over the long term, as long as we stay around these prices. But once we start increasing in price, I'll most likely just hold this and just enjoy the dividends from here. Now the next company is a new one. I believe we didn't cover this in the last update, and that is 3M. So I've purchased around 17 shares at 3M. I got it at around $157 or so, 158 almost. So I'm up close to 5% on this position. Nothing too significant. But the reason I picked up 3M was because, first of all, they grow their dividend incredibly quickly, anywhere between 5 and 10% year over year dividend growth, which is incredibly strong. Current dividend yield, I believe, is above 3% right now, but that's not too much of a concern to me because I'll be reinvesting dividends on all of these positions. But I also really like 3M because you can see its 5-year chart. It's come down quite significantly. If you look at it back in early 2018, this was a $240 stock almost, and now we're sitting at around $160, and I think that this is a bargain for a company like 3M. Again, a $100 billion company, good valuation, good potential in the future, and I just absolutely love holding this. This will most likely be one I'll add more to, especially if we drop lower. This is one that I have my eye on closely, so keep an eye on this for even next month for possibly a larger position in 3M. Next we have Lowe's. I believe we did cover this in the first month, have not added to this position. But since then, this company reported earnings, phenomenal earnings. I'm up around 18% of this position. Incredible performer, absolutely love this company. Managed to get in at a pretty good valuation here in the mid 90s or so, which I was fairly happy with. And if we do drop below 90, again, I will definitely be adding to this position. As of right now, though, there's no real plans to add more to Lowe's. Boeing, another great company to have in this portfolio. Have around 6 shares in it right now. Not too much money, around just over $2,100 or so. But I am happy with this position, more or less break even with it right now. And I do plan to add more to Boeing if we go under the $300 mark. But from the way things are looking right now, it seems to be that this company is holding well above $300, even with bad news consistently surrounding this. So Boeing is another company that actually increases their dividend yield incredibly fast year over year. They only recently started paying out a dividend, and I believe this company is going to be one of the strongest dividend growth companies over the long term. So that's why I kind of want to have some good exposure here to Boeing. Moving on, FedEx. This is a company that I actually added a bit to. We were down on this position, so I lowered my cost basis. I have 9 shares now, brought it down to 159 or so. And you can see now we're actually up on this position and close to 5% or so. Again, guys, these gains that I see here, not really anything that means much to me. You can see even Altria, we're down $350. Doesn't mean that much to me because, again, I'm investing in these stocks primarily for that dividend income and that growing dividend. Yes, capital appreciation is nice to see. It is nice to know, the stocks that you're investing in are growing and their stock price is going up because, that kind of confirmation that the business is doing well for the most part. But in the end, I want to live off that dividend income and I want to have my yield on cost as high as possible. So although these are nice to see, these greens right here, I'm up on 3M, Lowe's, Boeing, FedEx, it does not make a difference in my day-to-day investing for this portfolio. Moving right along, we have Texas Roadhouse, another stock that is new. We have around 25 shares of Texas Roadhouse, which is just around $1,300 or so. And you can see with this position, we are up. I did want to add a little bit more to this when we were kind of just below $50, but I didn't really get a chance to. That being said, I'm happy with this position. I will most likely add to this if we drop lower, just because I believe this is a stock that can continue growing their dividend. It's a very strong food retail chain type of company. And I think that since I don't have any exposure to something like McDonald's or Starbucks, because they're incredibly overvalued right now, this is kind of my play in that sector. Now, if those companies like McDonald's or Starbucks does come down in valuation, I will most likely buy those and pick those over Texas Roadhouse. That being said, though, I won't be selling this company unless they cut their dividend or something extreme like that. But just to add to this, I need to have a bit more reason and a better valuation than current prices. Moving along, another new company, Caterpillar. Only 10 shares of Caterpillar here, which kind of equates to around $1,200, $1,300 or so. This is another position that I kind of added to when the market was struggling in August. Took the opportunity to get some Caterpillar under $120 per share, and currently you can see we're up around 6.5% on this position. I don't really plan to add too much more to this just because Caterpillar is fairly cyclical, and even in terms of their dividend. They did raise their dividends through the last couple of recessions, but not really too confident that they'll continue doing that over the next few recessions. So I just want to leave my exposure fairly low to this one, but I still do want to have exposure to Caterpillar. They have a strong brand, they have a strong company behind them, financials are good, and it's a large company that plays in this space. And even though they only raised their dividend, I think it's around 6 or 7% year over year, it's still a raise nonetheless, and that will compound over time. But in the meantime, my cash is better spent, I believe, in companies like Boeing, like 3M, like Altria. Moving along, getting to the bottom here, we have Pfizer, another position that's new. Got Pfizer on the dip that it had last month. Managed to get this at around $34.85 per share. Picked up 20 shares of this. We're up around 5 and a bit percent on this position currently. And you can see this makes up a very small portion of my portfolio, only around 2.64%, which is $734. And this is most likely going to drop even more as I deploy more cash into this, into other positions. Pfizer isn't one I want to build into a large position. They don't really grow their dividend as quickly as I'd like. And they're also in the pharmaceutical space, which is similar to AbbVie. So I don't want to have too much exposure into any one sector. And because I do believe AbbVie is a better valuation right now than Pfizer, and they do actually grow their dividend faster, and they have a higher dividend yield currently compared to Pfizer, I would much rather put my money into AbbVie currently than Pfizer. And finally, closing off this list here is Pets. This is another position we're down on, around 4% or so. 44 shares of Pets. I didn't add any more to this. Don't plan to add any more to this. This is kind of one of those speculative stocks, if you must. Don't really want to have too many of those type of stocks in a retirement account. However, this company pays out a very good dividend. I believe the valuation on this company is severely undervalued right now, which is why I'm fine having a little bit of exposure here to Pets. And I do believe this is most likely going to stay as one of, say, the top 3 lowest sized positions in my portfolio. I also want to add that I currently have around $7,253 sitting in cash. I do plan to have a few $1,000s more coming in sometime in September, late September most likely. So this should sit closer to $10,000, which should bring me closer to $30,000 overall value. And that's kind of going to be the benchmark moving forward. I will most likely add more to this portfolio sometime in January, February, around taxes time. But in the meantime, I want to look for opportunities to deploy this cash. I don't want to hold cash for too long because this is an account that I plan to hold for 25, 30 years or so. So I want to get those dividends working for me as soon as possible. But I am still looking for good value and good valuations out there in the market. Now I just want to kind of talk about my portfolio analysis here quickly and just show you guys how the portfolio sits today with all these new positions. So you can see here we have around 74% in stocks, around 26% in cash. So a pretty good cash to stock balance here, but like I said, I want to deploy more or less all of this cash hopefully by the end of this year if we do see more opportunities. In terms of diversification, you can see I have some consumer goods, services, industrial goods, and healthcare. You can see a closer breakdown right here. In services, I have a few companies. Industrial goods, I have a couple. And then healthcare, I have a couple as well. My portfolio compared to the average portfolio is a pretty low beta, 0.95, so it's pretty good to see that I'm below the average. And I'm happy with this because I don't want this to be a very volatile portfolio. I just want this to be a safe, consistent portfolio that grows over time. Because these are my most volatile stocks near Caterpillar, FedEx, and Boeing. Funny enough, these first two at least, Caterpillar and FedEx, are very susceptible to global issues, so things like the trade tensions that's been going on. These companies have been fluctuating a lot because of that. Any negative news that comes out between the US and China affects these stocks, which is why I've gotten some good opportunities here to buy into these stocks at good valuations. Boeing's just kind of been relatively volatile recently just because of all the negativity surrounding that. But over time, I think this will kind of be more or less around in line with the rest of my portfolio at around 0.95. Estimated dividend yield in my portfolio is around 3.26%, which I'm happy with. I want to get this closer to 3.5 to 4% over time. But you can see here that my top peers, like I said, Altria, 7.6%, PetMed Express, 6.7%, but again, that's a very small position, and AbbVie around 6.3%. What I love about TipRanks is that they show me some upcoming dividends as well, so I always know when I'll be getting dividends, when I'll be getting paid dividends. They also estimate the dollar amount here on how much I'd get paid based on my current position, so that's something nice to see as well. And the last thing I always like to check is, of course, the PE ratios, my portfolio compared to the average. So I'm well under the average here. I'm sitting around 28.5. The average is around 38 or so. So I'm well below the average TipRanks portfolio. But again, that's not really a make or break thing for me. It's just nice to see that I am relatively seeking out value and purchasing value stocks as opposed to those high growth stocks here. So upcoming things for the calendar here, we have a couple of dividends getting paid out soon. FedEx, Texas Roadhouse, Altria, and those are the three for September. Lowe's will be paying us out in October. And then in October, we're going to have a whole bunch of earnings as well. So maybe we'll see some opportunities to add to these positions if the stocks drop even lower. So that's more or less a wrap here for this video, guys. I do hope that you enjoyed this. I hope that you understood the reasoning behind the new positions that I added. If you have any questions whatsoever, drop them in the comment section down below because I reply to each and every one of those. And make sure to check out our sponsor today, which is TipRanks. You guys can build your own portfolio and kind of follow along with me as well month over month. Let me know how your performance is versus mine, and we can kind of help each other grow together here and be successful over the long term. Guys, I hope you enjoyed this video. Hope you learned something valuable in this video. Stay tuned for next month's update because I do plan to purchase some new stocks. We'll see if that happens. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.